All right, joining us now from Mexico City for a look under the hood of the Latin American auto producing sector is Brendan Case from Bloomberg News. Brendan, thanks for being on the show tonight.
Thanks for having me on, Michelle.
Brendan, as we've been reporting, Mexico is now set to overtake Brazil as the top Latin American auto producer for the first time in more than a decade. How did this shift come about? What are the factors at play here?
Basically, what we're seeing, Michelle, is a reflection of what's going on in the primary markets of Mexico versus the primary market of Brazil. Mexico is a country that mainly exports cars, and the U.S. is by far its biggest market. U.S. auto sales are poised to reach their best level since 2006. That's great news for Mexico. That's great news if you're building cars in Mexico. The Brazilian economy has been slowing. It shrank in the first half of the year. There are tax issues, auto financing issues that are also pushing down auto sales in Brazil. As a result, the Brazilian auto plants, which are mainly built to sell cars to Brazilian consumers, are having to scale back production.
Well, Brazil's economy is certainly a big factor here in Mexico taking the top spot. Brazil was once the darling of the emerging market. It's fallen into recession, as you mentioned. Last quarter GDP down 0.6%, well, to 0.6%. Now, the emerging middle class are tightening their spending habits. How is all of the slowed consumer demand going to affect Brazil's auto industry in the long term?
Certainly, in the long term, there would be very much the possibility that Brazil could bounce back. It had a terrific decade until recently. Purchasing power rose. A lot of consumers came into the market to buy cars for the first time or to upgrade the cars that they had. Certainly in the short term, as you say, it's a much more troublesome picture. And if you're trying to sell cars in Brazil, and of course Brazil is the largest economy in Latin America, this makes for a tough market.
Well, Brendan, in June, Argentina and Brazil signed a new bilateral car trade pact, giving Buenos Aires more favorable terms. Now, keeping in mind that cars make up half of the $36 billion trade between the two neighbors. So how does Argentina fit into the picture now with regards to Brazil?
Apropos of the trade pact, Argentina has been another factor that has been pushing down Brazilian auto production, Argentina being the largest export market for Brazilian producers. It's also worth noting that trade tensions between Mexico and those two South American countries may be one of the stories to watch in coming months. Mexico agreed in 2012 to a quota system that limits Mexico's auto exports to Brazil and Argentina. Those restrictions are scheduled to come off next year. What remains to be seen is whether Brazil and Argentina may try to extend the restrictions given the weakness in their domestic auto sectors.
Well, Brendan, one of the factors that have helped Mexico is, of course, it borders the U.S., which is the world's second largest auto market. So with regards to restrictions, how significant has the North American Free Trade Agreement and the lifting of some of restrictions been for Mexico's rise as an automaker?
It's been huge. It's made it very easy to export cars from Mexico to the U.S. without tariffs. It's given automakers a lot of confidence to commit billions of dollars to the Mexican market. Mexico's got trade agreements that cover more than 40 countries, and so the U.S. is certainly not the only example of a place where trade agreements are helping Mexico access the auto market, but it's by far the largest. It's right next door. Transportation costs are low, and then you've got the big wage differential, which, to quantify it, Mexican auto workers will tend to make about 20% of U.S. levels in terms of total compensation costs.
Well, you're absolutely right. In fact, they make in a day roughly what a U.S. car factory worker will make in an hour. And part of Mexico's big appeal so far has been cheap labor. Now, there is a push to raise the minimum wage. If that happens, or just the talk of this push, what kind of impact do you think that could have?
It's going to be a really important issue to watch. I mean, Mexico has based a really big part of its economy on export competitiveness to the U.S. If costs, including labor costs, were to rise to such an extent that it would no longer be attractive to invest in the country, or I should say, it would no longer be as attractive to invest in the country. That could become a real problem for Mexico. But the push for a higher minimum wage also spotlights what is a real weakness for Mexico, which is weak consumer spending, low wages, not a particularly big market for cars. Mexican consumers bought about 1 million light trucks and cars last year. That's compared to about 3.5 million in Brazil. This is all sort of the flip side of the very competitive cost structure that Mexico has, which is that consumers just don't have as much money in their pockets as companies selling cars to them would like them to have.
Right. So the more they make in terms of earnings, the more cars they can also purchase. Mexico making about 3 million cars a year. We're going to have to leave it there for now. Brendan Case, thank you so much. Reporter from Bloomberg News.